You are welcome to Remit Forex Academy. In today's video, I'll be sharing with you top 6 day trading mistakes that all traders must avoid. If you are a beginner trader, a professional trader, you must have to consistently avoid these mistakes and master them. If you are new to this channel, please support the channel by leaving a like for this video, subscribe and turn on the bell notification to receive more updates like this when next I upload a new video. Top 6 day trading mistakes that all traders, especially beginner traders, must avoid. Mistake number 1, waiting even more after the big move. So the thing is, when you are trading, you must trade in such a way that you catch the first move in the market, because the first move in the market always have the greatest impulse. Let's say, for example, you are trading the usdjpy and market move this first impulse, market move from here upward, retrace, move again, retrace, and then move. Market move in a sideways direction right here before coming back to the downside. If you notice, one thing very important on this very chart is that this first move here is longer than any other move on the price chart right at this very point. So you have to ensure that your strategy catch the first move in the market. By so doing, you catch the big move and you wait for the market to present another opportunity for you to trade. I discovered that most traders, they wait and wait and wait and wait even more. Okay, all of the time the market move upward and then retrace back down, move another impulse, retrace, impulse. They did not take any trade, or they won't take any trade. They will wait for when the market come back here and want to take a position right at this point. What make you think that the market is going to move upward from this area when the market has been moving all this while from this very point upward, retrace, impulse, retrace, and impulse? Because we know that market don't move in a particular direction. This market have capacity of begin to move from here to the downside. So you must have to catch the first move and don't wait for a long time before taking a trade. Your strategy should capture the first move that will appear on your chart, because 90% of the time, statistically, this first impulse after a change in trend direction always give the highest length. Okay, mistake number 2, trading divergence and not waiting for confirmation. One of the most important thing in any strategy is entry confirmation. You must have that in your strategy. So what should happen to confirm you before you trigger a trade? So this is not only applicable to divergence, applied to every other strategy out there. So you must have to wait for confirmation. Let's say, for example, on usdjpy, if you are trading divergence, if you look at this very chart right here, there is a divergence right here. If you place this from here to the downside, the market is moving downward a little bit, and if you place exact same point on the indicator, that is the histogram of the MACD, you see it's moving upward a little bit. So this is a bullish divergence. This means that this market is going to move to the upside. But if we know that the market is going to move to the upside, what are we using to confirm this very divergence? Because all divergences that you see on your chart must be confirmed. So you have to draw your trend line. Trend line breakout is one of the key divergence confirmation that you can use. So when the market break out at this very point with this very candle, that is when you have to trigger your trade. So all this while you've identified the divergence, but it is not yet confirmed. So in your strategy, you must have trading confirmation. Don't just trade without a confirmation. So avoid this mistake number 2. Mistake number 3 is trading without a stop loss. I see a lot of beginner trader do this a lot. Let's say, for example, you are trading on the USDJPY and market move upward, and at this very point you believe the market is going to move to the upside. Maybe you are trading the impulse pullback trading strategy. So after this impulse, market retrace before continuation. So you are very sure that this is the end of retracement and market is going to move with the next impulse. That does not mean you should not place a stop loss. Okay, so if you enter a trade here, your stop loss must be below this level of support. Some trader will not place this stop loss. They will only enter their trade at this very point and leave the position open. Now, one thing you have to know is that nothing is guaranteed in the market. So even though you know that the market is going to move to the upside, always place your stop loss, okay, so that it will help you manage your risks. That is the purpose for setting a stop loss in the market, specifically for risks and money management. So don't forget to place your stop loss, because a lot of traders do that when they are trading, forgetting to place stop loss on their trade. Don't make this mistake. Number 3. Mistake number 4: too many indicators on your chart. Can you be very sincere with me? Are you been doing this, placing too many indicators on your price chart? And this will lead to confusion. Let's say you have the MACD, you still go to indicator section and you put the super trend, you still go to another one again. Maybe you pack all the indicators and put on your chart, and this will end you up in confusion. Don't do that. Too many indicators is not what will make you profitable in the market. Stick to one thing and that's all. So I recommend that you don't place too many indicators on your chart. The maximum indicator that should be on your chart is 2. Okay, you don't use one indicator. Okay, 2 is the best indicator to use, because since indicators are not perfect, you use the order to confirm the order on your chart. So 2 indicator is okay for you, not 3, 4, 5, 6, 7, 8, 9, 10 indicators on a single price chart. It is not the right thing to do. So avoid mistake number 4: too many indicators on your chart. Mistake number 5 is learning with the little capital. There is this misconception out there that if you are trading or you are starting up in trading, you must have a big capital before you must be successful. It's not true. What you need is a working strategy and better psychology in the market. Once you have a working strategy and a better psychology in the market, then you are good to go. It's not about the bulk of the money. If you have a bulk money and you cannot trade very well, then you are going to definitely lose that very sum. So what you have to do is trade with what you have. Okay, you trade with what you are willing to lose. Never put what you're not willing to lose into an account. That is very, very dangerous and devastating. So always trade with the little capital, learn with the little capital. So the most important thing for beginners is that you must have to learn with the little capital. When you are learning something, you don't risk too much. Okay, you risk a little, and then when you become a professional, you can then put more money into your account. Very, very important. And the last mistake that you have to avoid with all enthusiasm is mistake number 6: get rich quick syndrome and mentality. So I found out that a lot of traders, they think trading is a get rich quick stuff, okay, a get rich quick scheme. It is not so. No, far from it. Trading is a business. So when you treat it as a business, you give it time, you monitor it, work on your strategy to perfect it. I guarantee you, if you have a strategy that works 50% of the time with good risk reward management, you are going to be profitable in the market. Let's say with a 1 to 2, okay, 1 to 2 risk reward, you are going to be profitable. And if that strategy wins 50%, that is 50% win rate, you are going to be profitable in the market. So all you need to do is not to have that mentality of I want to get rich quick, because this will definitely affect your emotion, and that should not be. This is the number 6 mistake that you must have to avoid to become a pro trader. If you enjoy this video, please support the channel by leaving a like for this video, subscribe to the channel, and turn on the bell notification for more updates like this. Also, check the channel for other forex videos, educational content, technical analysis. If you want to learn how to trade forex profitably and professionally, check the description of this video. You see a contact, and reach out to me immediately for my trading course. Thank you for watching, and I will see you in the next video.